Hello, everyone. Welcome to the webinar today. Thank you all so much for joining us. We are here today with our partners from Loanspark. And my name is Kelsey Cooper. I'm the sales manager here at FTL Finance, and I've been with the company for about 8 years now. What we're going to do today is Loanspark is going to be sharing some information about how to identify the right business loans to fit your needs and how you should be preparing your business to increase the chances of loan eligibility. So if you do have any questions throughout this webinar, feel free to put those into the chat and we will address those at the end of the webinar. And with that, I'm going to hand it over to Sasha Yablanovsky, and she's going to explain a little bit more about Loanspark and the business loan process. So, Sasha?
Thank you so much, Kelsey. Hi, everybody. Thank you for joining. Really excited to be here. I'll tell you more about Loanspark, how we work with FTL Finance, a bit more about me, and how we work with HVAC contractors and business owners and help you thrive and succeed while you're all helping other homeowners live a better life. So let me start sharing my presentation here and we will kick it off. As Kelsey said, my name is Sasha Yablanovsky. I'm actually one of the founders of Loanspark. And we work with FTL Finance in order to provide business financing to HVAC companies that work with FTL Finance. I'm really excited about this topic because we have a lot of questions and we'll work with a lot of HVAC business owners about financing for their own business. And there's some complexities sometimes because your businesses tend to be seasonal. So we thought it'd be great to talk about the best way for you to position yourself for funding when you're ready to grow or just need some bridge to get from one success to another. So really looking forward to sharing more with you. But first, let's talk about Loanspark and what are we? We're a business lending platform and provider. We call ourselves Business Lending as a Service Company. What we work is with one application through us, we essentially work with hundreds of investors that are looking to invest and lend money to HVAC companies and HVAC business owners. So you don't have to go to many sources. You just come to us, you fill out one application, and we are the ones that do all the work of chasing the right kind of lending for you. So that's what we do. We only do business purpose lending, nothing personal. So you must be a registered business in order to get financing through us. The way we work with FTL Finance is we essentially provide funding to all of FTL Finance's HVAC contractors, which is why you're here. And we are the experts in business lending community. My background, as I said, I'm one of the owners. My background is in private equity and merging companies, running companies. My business partner, Michael, he's been in commercial lending and for 25 years. And the reason why we launched the company is because it's really hard as a small business owner to find the right lending, especially because over the last 10 to 15 years, there's been such an increase in predatory funding. Lots of brokers and lenders that really take advantage of small business owners like you. And business lending is not as regulated or really at all regulated the way consumer or personal lending is. So interest rates, additional fees can get charged and go up without really anybody monitoring it, which is really hard for you as business owners to know if you're being taken advantage of, if you have the right solution in front of you. So we created this company specifically to help the small business owner like you to know exactly what to steer away from and to go towards to. So that's why we decided to partner with companies like FTL Finance and provide this type of a service to you. So you know you're safe and secure in good hands. We work with over 300 investors and lenders. Some of them are banks, community banks, but some of them are private family money that invest in HVAC businesses like yours. We fund in 47 states and Canada. The only 3 states we don't fund in right now is South Dakota, North Dakota, and Vermont. All right, so how do we do what we do? And why should you trust us? Well, of all the businesses that come to us and apply through us, 65% get approved for a business loan. That's about 3 times the national standard. So the lenders that we work with are really great. We have hand-picked them, although it sounds like a big number over the years. We have hand-selected them to make sure that they are the right type of lenders for the small and medium businesses that we work with. Average loan size specifically for HVAC business owners is about $75,000 is what we see. If you blend that with other small business owners that we work with, it's about 95,000. We do have the capacity to do less and more, and I'll tell you a little more about that later. Average business loans that we see is 2 to 5 years, unless it's a real estate loan, because we do also do real estate lending. But on business loan side, that's the average that we see. And then typically we're able to get you funding within 3 to 5 business days. What that means is the funds are actually deposited into your account within that amount of time. So fairly quickly. Now, our number one goal is to fund every HVAC company. The reason why I say that and it's important to remember is because as we go through this training webinar and share with you the kind of things to know, the kind of things to do and not do to better position your company for financing, some of it is going to seem like, well, are you asking me these questions because you don't want to give me a loan? No, the opposite. We want to see where the bodies are buried so we can get you the right loan. So our number one goal is really to fund every HVAC company. All right. So the reason why, again, we created this program and why we're doing this training is because very often we see that HVAC companies struggle to secure the right funding. Banks require really rigid paperwork. And if you have applied through a bank, you know that they always require tax returns. A lot of the times your business shows a loss on a tax return while it's actually generating really healthy cash flow month to month. So you need a different solution than your standard bank to get approved for a loan. Now, often businesses like yours and others get declined because you don't know which lending entity to go to. If bank is not an option, really, what do you do? Some of you probably go online to figure out where to get alternative lending sources. Some of those alternative lending sources reshare and resell your information. Next thing you know, you get calls from a bunch of people who are promising you things you don't even know how they got your number. Sometimes you're faced with not affordable solutions. Like I mentioned earlier, in business lending, a lot of companies charge additional fees just to get your loan processed. We don't do any of that. With the bank, like I mentioned, it could be a very long and cumbersome process. So long story short, we've seen this problem and we have solved it. So here's how we work for you. We essentially do everything for you. All you have to do is fill out one application, like I mentioned before. You provide us with 3 months of bank statements, depending on the loan, but that's where we start. And then we figure out the right lending option for you, the most cost-effective option for you. We do all of the processing, underwriting, and everything in-house. So we keep it very secure. We only do soft pull on credit, which means never a hard pull, so we'll never impact your credit. Working with us, like I mentioned, you access the marketplace of lenders, so those over 300 lenders and investors we work with. And that's better for your chances of approval because, again, we do all of this work and we have more diversity of product that can be beneficial for any niche, so no matter what the business is. Also, we offer complete transparency. I don't know, I call it the Domino experience. I don't know if anybody has ever ordered Domino's pizza or Grubhub or DoorDash, anything like that. Typically in the app, it tells you what's happening. We're preparing your order. Or if it's a Domino's experience, it's actually the best. I love theirs because they will say, we're putting your pizza in the oven. Your pizza is baking in the oven. We're taking your pizza out of the oven. So it's so detailed and fun. You feel like you're part of the process and you know what's going on. So we recreated the Domino's experience. Everybody that applies for a business loan through us gets access to their own borrower portal. And in there, you see exactly where your loan application is. Is it being processed? Are we reviewing documents? Is it being underwritten? Are we reviewing approvals? Are we doing this, that, the other thing? So you kind of always see what we're doing for you, which gives you great transparency in knowing how things are moving along. But on top of that, you get a dedicated, what we call SMB advocate. Think about it as your own personal account manager that will call you with updates every day, someone that, is dedicated to you throughout the process. That way you're not just calling like some call center, and every time you're talking to a different person that doesn't know you, hasn't met you, doesn't know what they're talking about. So you get a very personalized, transparent touch with us. We pride ourselves on that. Money can be stressful, so we definitely want to make sure it's easier. Okay, the types of loans that we provide through FTL Finance is this. So you will see we have some short-term and long-term term loans. The funding amounts start at $10,000 for the longer ones that are up to 10 years in terms, and then the smaller ones start at $5,000, and those are up to 2 years. We do commercial real estate. We've encountered that some HVAC business owners own an office that they run things out of. So that's why we have that service. Rotating business line of credit is very similar to a home equity line, where you get approved for, let's say, $100,000, and it sits in an account for you. And let's say out of that $100,000, you only need $10,000 to run a marketing campaign. So when you draw that $10,000, you're only paying interest on that $10,000, not on the rest of the $90,000 that's safely sitting for you, ready to tap into whenever you want. So that's a revolving line of credit. Then we have working capital loans. Those are best for shorter term. I think of it as a bridge loan for businesses. So let's say you're like, oh, I'm expecting a really big payday in 3 weeks, but I need to pay my team and I need to buy supplies in order to finish or start my next project. So this is a great option for like, I need to get from here to there very quickly. That's that one. Equipment financing. We know you work with a lot of equipment. This could be your trucks, your cars, your ladders, any sort of equipment that you need to get your job done and to satisfy your customers. We're able to finance that for you. We have this as leases and loans. So a loan means you own this piece of equipment as soon as you get a financing through us. A lease means the lending company will own it, but essentially you have an opportunity to buy it out at any point. Both options are really great. Very inexpensive options we have. Why equipment financing? Because sometimes you don't want to use your cash flow to like pay up front for expensive equipment that you might need, or even if it's inexpensive, because you want to preserve your cash either to bring on more contractors for a big project or for something else. So it's a really great option. We also do SBA loans through government-approved SBA banks. We work with top 5. These loans are really meant to be the least expensive, but also the longest term. So we can talk about that later. So we offer all of these options for you. Let's talk about the best way to qualify. And what you should really keep in mind is you start putting yourself in the frame of mind of, I think I need a business loan, okay? So the FICO or your credit score should be at least 600. So that's first thing to kind of know. And the time in business with revenues should be at least 6 months. Well, 12 months, but I'll tell you about 6 months option 2. A good rule of thumb is 12 months. What does this mean? If you incorporated your business 10 years ago and you haven't done any work and you haven't received funds or anything like that in that business, that doesn't qualify. What we need to see is that you have deposits or money coming into a business checking account associated with your business entity. We recommend at least 1 year, but there's a but. If you are just looking for an equipment loan, then it can be 6 months. However, if you're looking for an SBA loan, the government dictates it has to be at least 24 months, so 2 years. But as a rule of thumb, you can start at 1 year. So a new business. Unfortunately, we don't do financing for startups, meaning if you just launched your company, you're super excited, We're super excited for you. Unfortunately, we won't be the right option for you. But as long as you've been in business for, 6 months for equipment loan, 12 months, anything else, we'll be happy to help. Let's say you're in a place where you're like, okay, this sounds great. I'd like to grow my team. I want to get started. What are the best ways to do that? So gather documents and get organized. I'll tell you what typically we will collect. And even if you don't go through us, which would make me sad, but these are the kind of documents you would need anyways, just good rule of thumb, okay? You would need tax returns. We don't require them, but it's good to have them in order. If you're applying for an SBA loan, tax documents are definitely required. Nothing else requires it. So that's tax returns. So that would be, I would recommend at least 2 years. So 2023 and 2024. Bank statements, at least 3 months, 6 months is best. And what that means is a bank statement associated with your business checking account that is related to the business that you are using to get a loan. Some of you have multiple LLCs or entities. You have to pick one that you're applying under, and the bank has to be associated with that entity. 6 months of bank statements. Profit and loss statements if you're doing an SBA loan, or if you're looking for a loan that's larger than $100,000. Most cases we can do without, but it's always good to have it. Profit and loss statement simply says how much money is going in, how much money is coming out. We have templates for this, so you don't have to worry about trying to figure out what that looks like. If you need one, we will help you with it. Balance sheets. A balance sheet is essentially a tally of running balances you have on your company. Again, we have templates. If that's ever required for a large loan amount or for an SBA loan, we can help you with that as well. So like it says here, we can help you with templates and anything like that. So I would say bare minimum, make sure that you have your bank statements in order, and that's a really good start already. Now, as a business entity, you always want to make sure that you're in good standing with SOS or Secretary of State office. Whether you're incorporated or you work as an LLC, you have to be in good standing with your state, which means that there's an annual fee that you pay. It depends state by state, so I can't tell you what it is, but you have to make sure you're in good standing with your state to do business. Entity ownership documents should be up to date. Typically, when you just start your company, that is the document you fill out for your state. However, let's say you started your company 10 years ago, you brought on 3 additional owners since then, this document will need to be updated because we will need to see ownership information. Banking is in the entity name, not a personal name. I just mentioned this a couple of minutes ago. So if you run your HVAC business, but all the deposits from your customers go to your personal checking account, not a specialty, business account that's in the name of your company name, that's not considered to be a business by anybody, not just us. So it's really important that you have a business checking account where your revenues are coming into to be considered a business. Let's say you're on your call and you're like, oh no, I've been running my company for a few years and everything's going to my personal checking account. What do I do? Well, the seasoning is 6 months. And what I mean is today you run out and you get your business account and all of the future deposits from your projects are going into that business account. You need that business account to be receiving deposits and revenue for at least 6 months for any legal lender. There's some illegal ones, but you don't want to go that route. For any legal lender to consider that to be a seasoned or fully developed business account. So if you don't have one today, run out and get one today. You can literally set up a business account online. So it's really important. Also, if you have a recently paid off loan, for an example, you took a loan out before and you recently paid it off. Be prepared to provide a current document, a document that's like a payoff letter that you would need from the previous lender. Or if you're still paying off that loan, you still have it, a business loan, not a personal loan, then you should have a current balance document ready as well. That way, it will help us assess what your current payments are on an existing loan, and to make sure we don't give you a loan or don't put you in a situation that puts you upside down and hurts your business because you can't carry the payments. Because our goal is to have you successful and succeeding and growing. Our goal is not to just fund a loan for the sake of funding a loan and put you upside down, because that wouldn't be good. Okay? So those are the things that are good to know as a business owner. Now, how to apply for a loan. There's an 866 number, an 800 number on your screen. That's a special number just for FTL Finance customers. So please call that number and our team will answer and start working with you. Also, I think you guys can see my video. It's right on the FTL Finance website. You can scroll all the way down. You'll see business loans there. You click on that, you'll see our page. And then on the bottom, it says, let's go. So you'll click on let's go, and it will bring you right to that application, online application form. Let's do that one more time because I like the video. You go to ftlfinance.com, you scroll all the way down. You'll see business loans option in the footer. You'll click on that. You'll see all the good information, and then scroll down, click let's go, and they will bring you right to the online application, and you can start immediately. All right, let's keep going. How do I go next? Next. Okay. So what happens after you apply for a loan or after you call that 800 number that I just shared with you? Well, you inquire about this financing. SMB advocate or your dedicated account manager will give you a call, typically within 1 hour. Call or text or email, depending how we can get a hold of you. We try all three. Then we help you fill out an application, or we send you a link to apply if you didn't finish it online on your own. After that, this goes to what we call a loan analyst. They will review your revenues, your information. We will do a soft pull on credit, never a hard pull, a soft pull on credit. And then we go fight for you, okay? Then we go to determine who is the worthy lender for you and your business to get you what you need today and what you're looking for. Those lenders, or those 300 plus investors that I mentioned earlier, they come to us with offers to bid and fight for your business for them. We review those offers, which we see which ones are the best for what you're looking for. And then we call you back and we present you with the offers we were able to find for you. We discuss the terms, the conditions, everything in great detail. We review with you what those payments look like, how frequent they are, how long the term is, and what it all looks like. Are there prepayment penalties? Usually there are no prepayment penalties, all those kind of things. We review everything with you in detail. After we review it with you, we will send it to you in writing as a recap. And if you're ready to proceed, we will send you a contract. A contract is between you and the lender or investor whose offer you have selected. Once you sign the agreement, typically within 24 to 48 hours, the funds get deposited into your business checking account. Okay, it's very simple. And throughout this journey, we provide you with updates very regularly. Okay. Now, let's talk about kind of best practices to get approved and the best practices in general when you are considering going for a business loan, okay? When we call you or when you call us and you fill out an application, we do call you to talk to you because we're real people working with real people. We want to know about your business, yourself, and kind of what your goals are, what the backstory is, and what the future holds. Why? Because we take all of that into consideration to figure out the right loan for you. So what I mean by that is you might not want to disclose that, naturally, you might not want to disclose that perhaps you're coming out of a recent bankruptcy. Or maybe you want to share with us, hey, here's what I need the loan today, because in 3 years, this is really where I plan to grow my company or maybe expand beyond my state lines. We need to know all these things up front only because it helps us understand the right lenders to bring to the table, the right type of offer for you. If you went through bankruptcy, it's okay. We have options for businesses that have come out of bankruptcy. But if we don't know that up front, then we won't go to the right investors for the right type of loans. Not all investors are willing to work with businesses that had previous bankruptcies, but we have so many that do. So we want to make sure we know these things so that we don't waste your time or anybody else's, and we get you the right kind of partner in this, okay? We want to hear about your future plans because it helps us brainstorm with you. You might come in and say, I want an SBA loan. Great. Tell me why, right? Let's talk about that. Maybe you want to do an SBA loan in parallel with something else because it's important to pick the right loan for the right type of needs. They're not all created equal. So that's why it's important for us to know so we can strategize alongside with you. Disclose known issues. You might say, hey, I've had a really rough couple of months recently, and even my bank statements will show that I have not sufficient funds or I bounced a couple of checks. Can we work through that? If we know those things up front, we know how to position your loan, okay? Know your credit score. It's really important anyways in life, I think, just to know this, but know it because what could happen is you come in and we would ask you, do you know approximately what your credit score is before we do a soft pull? And you might say, I'm at 750. And we're like, amazing. And then we pull your credit and it's like 650 because you didn't realize it dropped. That will change our strategy with you and the types of loans we're able to get you. So it's important that you know it. Avoid surprises for you and for us. Know your monthly revenue deposits. Typically, when we ask, what is your revenue? We don't mean net revenue. We mean gross revenue. Gross revenue means how much are you making in deposits before you pay your team, before you pay electricity, before you pay for your trucks, anything like that. Just gross. Money coming in is really all we care about. So we ask about revenue, that's what we mean. Not what's left over in the business, what's coming into the business at any given time. Now, in your line of business, a lot of you, depending where you are throughout the country, what kind of state you work in, it might be seasonal business. Maybe work is really heavy in the summer and not so great in the winter. It depends on what you do and how you do it. Apply during your steady season. Try not to apply during your dead season, I'll call it, because that's harder to assess how you'll be doing. We don't typically look at your full year. We just look at the last maybe 3 months, right? To really understand, hey, that's what we will use to project how the rest of the year will go. And if you're applying in your kind of worst lull, it will tell us and the lenders that you're not generating as much in revenue. So apply kind of either in the middle or right in the beginning of peak. That way, the projections are based on where you are today and how the last 3 months have been. That's important. Also apply when the cash flows are the steadiest. It may seem counterintuitive, but planning ahead in business lending is really important. When you're in a position where you're kind of already stuck, those loans become more expensive and harder to come by, and we want to avoid that. We want you to not get yourself in a situation where you're getting an expensive loan because you're in trouble. We have those options, but the idea is let's plan ahead. It's good sense for business ownership. Now, things we don't want, and it brings me right here. Do not wait until you're in a financial emergency. We see this all the time. I get it. So my family is small business owners. I totally get it how it is. You're like, okay, it's a bad month. Next one's going to be better. Oh, it's another bad month. I don't know. I think it will get better. And then you wait so long that you're like, well, it's messed up. Like, I don't know if I can keep these contractors. I don't know if I can keep, pay these people. I don't know if I can afford my truck for work anymore. Don't wait until you're in the emergency. If you feel like things might get tough soon, get a loan now. Just in case. You want the safety net, you want the cushion. Okay? So do that. Don't apply during your lowest cash period, as I just mentioned. Don't hide details. We'll find out one way or the other. Tell us up front. We're here to partner with you and help you get a loan, even if you're in a sticky situation. So be honest with us. Now, here's the fun part most people don't know. Don't change ownership right before you apply for a business loan. Fun fact. Let's say you are 100% owner of your business. And then your spouse wants to join, or your best friends, or you just need help. You're growing. You need another business owner. And you go from majority ownership, 100%, to let's say 50-50. If you do this right before you apply for a loan, the way lenders look at that is that now you have two owners, but one of the owners that used to own the business for the last 10 years is now only 50% owner. So now I need the other owner, but the other owner has been in the business for like a month or 2 months, or if it's less than a year, it will actually hurt your chances of getting approved. So here's what I would do if you're considering change of ownership. First, apply for the loan when you're a majority owner. Now, if you're going to remain 75% business owner or more, if you're bringing somebody on that's only going to be 25% owner, that's totally fine. But if it's 51% ownership or less, not fine. First, apply for a business loan. After you're granted the business loan, then you can change the ownership structure. Then it doesn't hurt your finances in that way. Okay. The other thing important to know is don't change your entity structure before you need a loan. Most people don't know this. They don't teach this in any school. You have to find out the hard way. Let's say you want to go from being an LLC to a corp, or the other way around, or you're going from a sole proprietor to an LLC, or LLC to a sole proprietorship. And yes, we have loans for sole proprietors. But here's the thing. When you change your entity type, in the eyes of the law, that new entity type is considered to be just born, just created. What does that mean? You've been running your business for 20 years, and all of a sudden you change your entity type. As soon as that entity type changes, your company is no longer 20 years old. It's now born on the day that your entity type changed. So all of a sudden, you're like, but I have all these bank statements and tax returns to show you that my LLC has been operating for 20 years, but my corp was changed, and now that's only a month ago. All of that history gone. You will never be able to get approved for a business loan unless you wait for at least 6 months. So keep that in mind, changing entity type. First get the loan, then you can change the entity type. It doesn't hurt you in that way. Same goes for changing company name. Another thing that most people find out the hard way. Same thing as entity type. If you change your business name, nothing wrong with that, but don't do it before you apply for a loan. Do it afterwards, okay? Because new business name means clean slate. Everything you did under the old business name doesn't show anymore. Like you can't borrow against that. And do not change your business checking account. Lately, we've encountered a few businesses, not in the HVAC space necessarily, just in general, where their business account was compromised. So they had to create a new business account. And for a new business account, that whole seasoning period that I shared with all of you on the call, it takes at least 6 months to have a business account to be considered for any type of a loan. So if you're looking to change banks or anything like that, do it after you get the loan, and then you can change a bank, and then you can tell the lender, here's my new banking information. Don't do it before, because it also kind of resets the time in business, so to speak. So those are the good practices to keep in mind that most people never, like, we don't know. No one knows until you know. Okay, what can you expect from us? So as I mentioned, we provide personal hands-on support. So we'll work with you, answer any questions. You have a real person that you can work with. Although some HVAC companies we work with definitely prefer texting and emails because you're so busy during the day, and we're perfectly happy to accommodate that. We don't always have to get on the call with you. We're just here for you, the way that you want us to be. Some people want to talk to us kind of ear to ear, face to face. Others just want to text, and we're comfortable with that too. Regular progress updates we will provide at all times. We are SOC 2 Type 2 certified. What that means is we're certified to manage your data in the highest possible regard. That is the top kind of certification globally. That is recognized. We work with some of our customers, just so you know, are federally regulated entities. We get audited every quarter for our business practices and our security protocols. So just so you know, although I feel like no one's data is safe nowadays, we definitely are held to a higher standard. So hopefully that gives you much needed confidence. We do have many diverse lending options, as I mentioned before, which is why we are very successful at what we do. And we work with a lot of different types of entities and lenders and investors throughout the country. So sometimes there isn't the right option for you where you're regionally or locally based, and we are able to fetch others that you normally wouldn't have access to. And we have very clear process and steps. We keep it very transparent. It's important for us that you know exactly what's happening with your money, with your loan. I always say I grew up kind of in a household where my parents always said, don't let other people mess with your money. You have to be aware of what's going on. It's yours, right? You have to take care of yourself, your family, your business. So we really work on making sure that our practices are transparent because finances can be stressful, and we try to make it less so for our customer base. All right. Again, our number one goal is to fund every HVAC company. So when you come to us and you feel like, why are you asking me if I have previous loans? Why are you asking me if I had prior bankruptcy? It's not because we want to say, no, thanks, we don't want to work with you. It's because we truly want to figure out the right opportunity for you. All right. So with that said, Loanspark and FTL Finance, like we really believe that great companies should work together and help each other with growth and opportunity, which is why we partnered together to do this, but also Loanspark to work with companies like yours to make sure that we provide the right kind of opportunities for you to grow and expand your business. It's really important to us. So that's why we're here for you today, and we'll continue to be. And that concludes this presentation. And I would love to see if there's any questions that came in that I can answer.
Absolutely. Thank you so much, Sasha. That was some great information you've provided. And yeah, we will go ahead and open it up for questions. So if you do have a question, feel free to go ahead and type that into the chat. Looks like we've got one here. So, and you may have touched on this, but what happens if there are multiple owners for a business? Which owner is going to apply?
Good question. So if you have multiple owners, typically just the one owner that is 75% or more can apply. However, if it's 50-50 ownership, or let's say 51-49 ownership, depending on the investor we work with, there might be a chance that just the owner with 51% will be applied and considered. However, if you have multiple owners, what I would do is figure out who has the highest FICO and apply under that person's name as the primary, because that will give you the best rate and the best type of deal. What may happen if you are 50-50 or 25-25-25 or 33-33-33 is, again, primary can be the person with the highest FICO, but we will require ID of the other owners. And we will require them to sign and acknowledge the application so that you're not taking a business loan out in secrecy. That's really what it is. It's to make sure the other business partners you have know that you're taking a loan. But if you have multiple, pick the one with the highest FICO to be the primary on the application to increase chances of approval and also better rates. Good question.
Thank you. Thank you. All right. I think we've got one more here coming in. So is it possible to have more than one loan at a time? So if someone already has a current loan, can they get approved for another one?
Yes, yes. So here's how it typically works. Different types of loans for different types of things. For an example, most commonly in the HVAC community, what we see is someone taking out an equipment loan and combining it with a line of credit. Equipment you use specifically for equipment, line of credit you're using specifically for other things like marketing or hiring people or team expansion, anything like that. So you can combine those. You can combine 3 or 4 as long as they're different types of loans. So for an example, an SBA loan in combination with line of credit, in combination with equipment, in combination with something else. And again, it will, how do you want to, where are those funds going for? What do you need them for? So we can help you kind of figure that out. What I won't do, what our company doesn't do is on the working capital loans, we won't what's called stack you. Some companies will give you two working capital loans. Working capital loans are the ones that are the shorter term loans. They have a tendency to be a little more expensive because they're shorter term. A great resource for like getting you from point A to point B while you're waiting for a big paycheck to come in or something. But we won't stack loans of the same type because although legal, not a regulated, really, business lending is, like I said, not very regulated. Although legal, we don't consider that to be ethical. So we won't do that, but we will combine other types of loans.
Okay, awesome. One more here. What are the typical interest rates, and is there a down payment associated with business loans?
Okay, great question. So I'll answer the first part. The interest rates vary. It depends on the loan type. Here's what I will tell you. No one beats the bank, okay? And if they tell you they will, they're just lying to you. Your local bank where you process your deposits will be the best rate possible. Now, it might take 4 to 6 months to actually give you the funds, and they will require a lot more paperwork. But if you have time to wait, I would definitely start with your local bank, whether it's a community bank, credit union, anybody you work with, even like a large bank like a Bank of America or somebody like that. They will have the best rates. Okay, our rates are about 1 or 2% higher than whatever the bank offers. Ours is a little higher because, again, we're not the bank. No one is except for the bank. And we do work faster and we require way less paperwork. So most business owners that go not through their bank where they do their banking, they're okay paying 1 or 2%. To be more specific, for an example, for an equipment loan, the rates can start as low as 6% with us, depending on type of equipment. It's pretty competitive. Then you have, let's say, lines of credit. We have excellent line of credit programs. Those start at 2%. We typically see 2 to 3%. So that's on the draw. You know how I said $100,000 you get approved on, but you want to just take $10,000 for your marketing and let the other kind of sit in reserve until it's ready. You don't pay the interest rate on the 90,000 that's sitting, but that 10,000 you're utilizing today, you would be paying only 2 to 3% per month on that. So principal and interest. Hopefully that answers that question for you. And then I think the second part of that question was, let me take a look. I forgot.
Down payment.
Oh, down payment. No down payments, except for equipment loan or real estate loan. Real estate, of course, all real estate requires down payment. We do have zero down payment options, but those are harder. Equipment loans, leases don't usually require down payment. With the lease, there is a document processing fee through the leasing company. Sometimes it's $500 to $1,000. No down payment there. On an actual equipment loan, typically there is a down payment, but it's dictated by the seller, not by the lending entity. Okay. So if a seller says, hey, you need this type of a down payment, that's the down payment you would have to buy. So typically that's how it works. But no down payment on a loan. Now, I'll answer that question slightly differently. Other fees. So we don't charge any additional fees. However, certain lenders will say, for you, once you get your funds in, they say to activate your loan, they will charge you a fee. Sometimes there's no fee, depending on the loan type. Sometimes there's a fee. What does that mean? Sometimes in order, like once they deposit the money, the first time you kind of access the money, there might be a $500 one-time fee. Just one time to kind of activate the loan. So that might happen. And lines of credit, because it's a revolving line of credit, it's kind of like you don't pay for it unless you use it. A lot of the lenders require you to take initial draw to activate it. Sometimes it's $500 and you can just put it right back in if you don't want it. And sometimes it's $1,000 or more, depending on the amount. So those are the kind of things that do exist, which are totally fine. Good question.
Awesome. Well, I don't see any more questions coming in, but Sasha, we very much appreciate your time today. Thank you so much for the information, and thank you so much for everyone who was able to join us today.
Great. Thank you so much. Thank you, FTL Finance, for hosting us, and thanks everybody for joining. I appreciate it.
All right. Have a great day.
Bye, you too.